ISA570 going concern, the revised standard. Guys, our standard headings have been highlighted. Scope, objective, requirements. I have specifically gone and highlighted the additional audit procedures where events or conditions are identified, because those are going to give us those substantive procedures we need to perform. I do also just want to take you to this responsibility for assessment paragraph before we get to the requirements. So let's go to paragraph 3. And the biggest thing I want to show you here is that it is your accounting standard that says management need to make an assessment of the entity's ability to continue. Okay, I've got some highlighted factors after that about what they consider in making that assessment. You guys can work through that. That's all I want to show you. So let's go to the requirements. The first requirement, risk assessment procedures. So guys, this is happening in the planning stage. Remember, when we start reading through our scenarios, we start to identify risks at the financial statement level that could affect the going concern, because we are in our planning factors. These are the things that we are looking for that will help us to identify conditions that cast doubt on the entity's ability to continue as a going concern. So guys, you already know these. I know you are comfortable with them. Let's just quickly go to A3 to A6 to see what I'm talking about. So some indicators, financial, if they're in a net liability position, if there is no opportunity of renewal of their borrowings, or withdrawal of creditor support, negative operating cash flows, adverse financial ratios, operating loss, all of these that we would pick up in our reading time as risks at the financial statement level. Inability to pay creditors. So some of our financial ones, our operating factors, management intent to liquidate or loss of key management, labor difficulties. All of these indicate potential threats to the going concern assumption. Non-compliance with regulatory requirements and as a result pending litigations. Okay, then we have got our mitigating factors. So all of these bring hope to the risk that the going concern assumption is at a threat. These things, like if they are unable to pay their normal debts, but management has a plan to maintain an adequate cash flow by disposing of assets, rescheduling loan repayments, obtaining additional capital, maybe through shares. Okay, similarly, if they are going to lose a supplier, being able to find an alternative source. So all of these are the factors we're going to look for in a scenario that maybe prove that they are a going concern, even though there were some threats to being a going concern. Then we've got here that we need to evaluate management's assessment, and important to note that that assessment should be for the 12 months post the date of the financials, because it is the foreseeable future. So we need to have an assessment for at least 12 months. Period beyond management's assessment. So if there are potential events or conditions that are beyond the assessment that may cast doubt, we need to discuss this with management. Okay, and I've highlighted A14, but I'm not going to go there. You can have a look at that. Now we get into auditing the going concern. So those procedures we need to perform to test whether they are a going concern or whether there is a material uncertainty. Okay, and I've highlighted A16, so let's look at them. So procedures like analyzing and discussing cash flow, profits, or other relevant forecasts from management. Analyzing and discussing the latest interim financial statements, so for the next period. Reading the terms of debentures and loan agreements to see if they've been reached. Reading the minutes of meetings for reference of financial difficulties, indicating maybe they can't continue. And legal counsel for litigations or claims. Okay, confirming the existence of financial support if they've been able to get it as a mitigating factor. What are their plans to fulfill unfulfilled customer orders? Okay, confirming the existence of their borrowings and what are the supports for disposal of assets. So procedures to test, are they a going concern, by looking at the threats to it as well as testing the mitigating factors they've maybe proposed. Other procedures request management to make an assessment, then evaluate that assessment. We can also look at those cash flow forecasts and analyze the factors that are significant for that, and then getting a management representation letter from them. In terms of our audit conclusion, so now we need to conclude. We've got to consider if there is a material uncertainty and whether it has been appropriately recorded, and then in addition to that, whether the use of the going concern assumption is correct. And there it is for you guys, step by step. Number 1, conclude on the appropriateness of the going concern. I need to put that down. I must evaluate whether the going concern basis of accounting is appropriate. Then my next step, number 2, I must write this down, consider whether a material uncertainty exists. So I actually put those 2 steps down, and then you can see these are the different opinions. I will say, if there is a material uncertainty, have they adequately disclosed the events and conditions and the material uncertainty? Then, if there's no material uncertainty, have they adequately disclosed? So I'm not going to worry about that. And then we'll actually go into the different opinions. So, if the going concern basis is inappropriate, they should not be preparing it on a going concern. We will give an adverse opinion. However, if the going concern is appropriate, but there is a material uncertainty, and they have adequately disclosed, we will give an unmodified attention, but include a material uncertainty related to the going concern paragraph. Okay. If adequate disclosure on the material uncertainty is not made, we will give either a qualified or an adverse opinion, depending on the extent of that disclosure that was made. So basically, if there is little disclosure, qualified; if there is no disclosure, adverse. Okay. If management are unwilling to extend the assessment, A35 says we will disclaim. Let's go and attempt this going concern question, guys. Class example 2 in your class example document. You've got 1.5 minutes reading time and you've got 4.5 minutes writing time.